Hi folks, Chris Mathis here, and I'm the lead currency strategist for the Forex Mentor Daily Trade Plan. And today we're going to talk about the most important component of your trading plan. Okay, and that component is risk management. Now, what I'm going to do today is I'm going to quickly go through these slides, and these are just slides that I made for our risk management tutorial in the Daily Trade Plan. But I'm going to go through these slides very quickly, and then what we'll do is we'll go over some two live trading examples that I personally took earlier this week. Trades that did not work out as I originally intended them to. Okay, but I'm going to show how risk management allowed me to limit my exposure and really reduce my risk on these trades for a very small drawdown. And a lot of people will probably think, wow, you're going to come on here and you're going to show us losing trades. Why would you do that? We want to see winning trades. Well, the fact of the matter is, in real life trading, you're going to have trading losses. How you handle those trading losses or how you handle and manage those trades is what is going to keep you in this business. All right, so let's go ahead and go through these slides here. Now, the most important aspect of trading, we've already talked about that, risk management. Risk management will keep you in the trading business through the learning process, through volatile markets, through mistakes, through unexpected data. We're talking about news releases, news events, things that happen during the day that create price spikes, all those kinds of things. Okay, your risk management is what's going to keep you in this market, in this business, through these types of things. If you do not use proper risk management, odds are you will not be trading these markets very long. It's just a simple fact. Okay, these markets will kung fu you very quickly if you do not use proper risk management. Every professional trader focuses on risk management. If you talk to any hedge fund trader out here, anybody who is managing anybody's money, okay, their main focus is going to be on risk, capital preservation. Just some ways these are some rules in place for myself that I teach others in the daily trade plan. I do not risk more than 1% of my overall account capital on any one trade, or 2% on any combination of trades. And very often you'll see I risk much less than that. I think I normally average right around 0.7% risk. Always use a stop loss. Always, always, always use a stop loss. Okay, that's really the only way you can manage your risk on your initial trade, is to have a standard stop loss in place. Okay, don't over leverage your positions. Okay, and this becomes important. Folks will often come to me and say, well, we're able to use 500 to 1 leverage here. And, why would you want to? When you're using that much leverage and a broker cannot guarantee a stop loss, these markets can get very volatile. And if you're using 500 to 1 leverage, you're actually using that kind of leverage and price moves a little bit past your stop before you get filled on that order, you're talking about, a much larger percentage of your account being lost. All right, so those are just things you need to really consider. Okay, do not trade in low liquid markets. Okay, when you're trading in low liquid markets, the probability is not there. Okay, you're not dealing with the same probabilities as when you're trading in a liquid market that has more participants. Okay, and just think of it like this. If you take 5 losses in a row at 1% risk, you're talking about 5% drawdown. 5% drawdown. Now let's just say you're risking 5% on each trade. If you just take 5 losses in a row, and it's not very hard to do, and I will almost step out there and say that everybody will have this happen at one point in time in their trading careers, maybe even more. Okay, but if you're risking 5%, that's 25% drawdown. That is 1/4, 1/4 of your overall account capital that you've just lost. Okay, then this gets into a psychological battle of whether you can actually recover from that. Okay, and that's where we talk about protecting your mental capital. Okay, your mental capital is just as important as your actual trading capital. Okay, because once you start to lose your mental capital, you start to make other mistakes. You'll start to double down. You'll start to make it affects your overall trading decisions. Okay, now risk management doesn't just have to do with the initial stop loss. Okay, it also has to do with your trade management. Okay, trade management is part of risk management, and when we talk about that in the daily trade plan, we talk about very often about reducing risk, removing risk, and locking in profits. Okay, so even if a trade doesn't work out, very often we're able to reduce the risk on that trade or remove the risk completely. So where we're taking either a smaller loss or a break-even trade. Okay, and you'll see in the long run, when you're not taking full losses, but you're letting your profits run. Everybody's heard, cut your losses short, let your profits run. But how do you really do that from a practical point of view? Okay, and that's what I'm going to walk through with these two trades that I took this week that did not work out as I would have liked. Okay, but I was able to reduce the risk on the trades to have a very small drawdown at the end of the day. All right, so let's go ahead and take a look at those trades. Okay, now here was the first trading setup, and this was on the Kiwi dollar. And you see we had a divergent setup here. We had price moving higher, MACD swinging lower. We had the initial decline here below the swing points of our the points that diverged here. Okay, so we had a qualified divergence setup, and what I did was I sold at this 85 level. I just had a market order in, and I sold at this 85 level, targeting lower moves here. Again, I actually had a deeper target on this, looking for a larger swing in this case, and my stop loss was above the high. So my initial stop loss was above the high because if price traveled above this high, then I wanted to be out of the trade. Okay, the pattern was no longer valid. Okay, so here we're in the trade, and let's go ahead and push this forward. Actually, I need to go ahead and put the 79% fib on here as well, because that's a key factor in determining how we reduce the risk on this. So let me go ahead and just push this trade forward and show what happened here. Now, you can see at this point we had a little bit of a reaction off the 62%, and then price continued higher to the 79% fib. All right, at which point we created a swing point. Now, at this point, after price tested this 79% fib, this is basically the last line of defense when it comes to fibs, okay, for that high. So in my mind at this point, instead of keeping the risk above this high, since we've created a swing point here, I went ahead and reduced the risk on the trade, okay, by moving that stop loss from above that 86.39 level to just above this swing point. All right, the thinking is if price rallies up again and takes out this swing, the probability is that we're moving to new highs. All right, so why leave the entire amount of risk and exposure in this trade? Okay, so we took the risk from the stop loss from the high and moved it just above this swing point. And you'll see as we move price forward here, price indeed took out the stop loss at a reduced risk and continued higher. Okay, now before I show the results, let me show the second trade, and it was on the dollar CAD. I'm just walking through these trades so you can see that they were sound trades. Anybody who trades a divergent strategy with us knows that this is a very good trading strategy. Okay, but this one did not work out, even though it was a good setup. Let's go over to the dollar CAD. Okay, here was the dollar CAD. Now, on the dollar CAD here, you can see we had a nice little confluence of support. Price had rallied up out of this triangle. We were pulling back here. Okay, we had this trend line coming down that lined up with the 50% fib of this swing. We also had previous price resistance right here. If I go ahead and draw that in, you see we had previous price resistance right here at this same area. Okay, so we basically had a triple confluence of reasons to look for support here. So what I did was I put in an order entry for price to initially bounce and continue on towards our Fibonacci extension level. Now, when I pushed price forward here, obviously we could see, oops, let me get that on the right resolution here. Okay, now we can see on this bar how strongly we moved through this level. And this is a 4-hour chart. Okay, so this was a pretty big movement. Now the stop loss initially was below was below the 62% Fibonacci retracement, but you can see we kind of blew right through that expected support level. All right, so what I did was I drilled down to the smaller degree time frame. We looked at the 15-minute chart. Now, at that level, on the 15-minute chart, this is what happened. Okay, we had price moving lower, we had MACD swinging higher, and then we had a rally here. Okay, now after this took place right at that 62% Fibonacci retracement level, okay, I decided to go ahead and reduce the risk, because if we had this divergence, we had price rallying here, if price came back down through that 62%, I wanted to be out of the trade. I just wanted to be out of it. I wanted to reduce the risk on this trade at that point. This is what it looked like on the 4-hour chart. Okay, here you can see we hit the 62% Fibonacci retracement level and we started to bounce. On our 15-minute chart, you just saw the divergence and the rally. Okay, so instead of having that stop loss further down here at this point, we went ahead and removed it, pulled the risk just below, pulled the stop loss just below this low. So if price continued down, we'd be out of the trade at a reduced risk. All right, and as I push this forward here, you can see we rallied here, rallied nicely, and then price just came down and continued to the downside, which would have taken us out for the full stop loss. Okay, so what we did was we cut the loss short by reducing the risk behind solid technical reasons. Okay, so and the end result of this, let's open up, and I do all my trading live for the membership folks, so folks can see my live trading results. Here's my FX book. This is a live account that I trade for the service that everybody can see. 2 losses this week. Not a great week for me. Okay, but you see that number right there? That's the drawdown this week. Minus 0.73%. Not even 1% on 2 trading losses there. Not even 1%. Okay, and you can see for the month we're still up almost 6.5% for the month. Okay, folks, so you can see how reducing risk on your trades can really help you limit your exposure in the market. And over the long term, you will see it greatly benefit your trading numbers. Remember, in trading, we're thinking the long game here. Okay, it's not about one individual trade. Even if I risk 1%, okay, when I first open up my trade, over the average over 20 trading losses, it may be 0.5% because we're reducing the risk on the trades, while at the same time you're letting your profits run. Okay, we're not cutting our profits short, we're only cutting our losses short. We reduce the risk in the trades, reduce and remove risk. Okay, and over the long run, you can see how this is going to benefit you. Remember, folks, this is a numbers game. This isn't about being right or wrong. The most important part of your trading plan isn't your trading strategy. Okay, it's an important part, but it's not the most important part. The most important parts of your trading plan are your risk management, your trade management, things like reward to risk ratio, all your fundamental principles, all your foundational principles. Those are what are going to help you become long-term successful in this market. Thanks for watching, folks. Any questions about the Daily Trade Plan service, please send them into info@forexmentor.com and come visit us at forexmentor.com/daily trade plan. Happy trading, folks. Take care and goodbye for now.